So today we are going to be talking and unveiling our custom index that we're working together with Questrade for. We named it Hidden AI Winners. So Simon, how about you go through and explain what we're doing here?
Custom indexing is a brand new feature being launched by Questrade. Is like building your own version of an index. So instead of buying an ETF and owning everything inside of it, because the S&P 500, you may not want every single company, you can start with a template and then customize it. You can add companies, you can remove companies, you can adjust sector exposure and make the index better fit your own views and portfolio. And that's why we partnered with Questrade to create the TCI index. The index is built around companies that could benefit from long-term structural trends, specifically related to AI. But it's not meant to be blindly copied. It's meant as a starting point. You may hear companies that you've never heard of before, and that's the whole point. You can review it, change it, make it your own. And with Questrade custom indexing, you directly own the shares of the underlying stock through fractional shares. There's no management fees charged by Questrade and no trading fees, though foreign exchange fees may still apply. You can also rebalance the index with one click if it drifts from the target allocation that you have. The product is available in cash accounts, TFSA, RSPs, and FHSAs. And the main idea is more control than a traditional ETF, but more structure than building everything manually. And as part of the launch of the custom indexing, Questrade is also running a contest. So the contest runs from June 1st to July 16, 2026. The winner will be drawn on July 30th. The grand prize winner gets TFSA contributions for a decade. So that's $7,000 per year for 10 years for a total of $70,000. The prize also includes a 3-night luxury wilderness getaway for two to Naimo Bay Wilderness Resort in BC, valued at over $30,000. To enter the contest, users need to open a Questrade custom indexing account and save an index in draft from a template in the library.
We're happy to be partner with them, but I will say I went to their launch event and a lot of things were very much so trading and maybe not necessarily for me or this audience. But this feature, I was like, okay, this is the one that I want to talk about to the audience. This is the one that I want to use, because how nice is it to be able to remix even just a passive S&P 500 type of index? It's like, oh, like I want S&P exposure, but I don't want 7% of the portfolio to be in Tesla or whatever the exposure is today. So like that could be where some people really enjoy what we're doing here.
Could, like before, if you wanted, say, the S&P 500 X Mag 7, you had to go to an ETF and probably pay, I don't know what those funds would charge, probably 20, 30 basis points. And now you can get it no fees. You can do it in a few clicks.
Yeah, and I guess maybe the last thing before we get started is I didn't look too much at the valuation. I really looked at more the company and the prospects longer term in terms of the AI exposure. If you look at the valuation, there are a lot of these companies that are still pretty richly
let me
valued.
speak on behalf of all of them. They're expensive.
So the first one is Quanta Services, ticker PWR. It's a name that I've talked quite a bit on the podcast. I wish I would have invested in the name when I first talked about it, because it would have been quite the returns. It's a picks and shovel infrastructure company for electrification, grid upgrades, renewable data centers, utilities, pipelines, and communication infrastructure. They provide engineering, construction, installation, repair, and maintenance services for critical infrastructure. And obviously, the play here is you're just betting that AI will demand more and more power. It's going to demand expansion of the grid, and Quanta Services will just be a big beneficiary of that, especially being their largest segment. The next one here is GE Vernova, ticker GEV. GEV was spun out of GE and is now focused on equipment services needed to generate, move, and manage electricity. They have three main segments: power, which include things like gas turbines, steam power, nuclear hydro; wind, which is, of course, wind turbines and services; and electrification, which is grid equipment, grid automation, storage, etc. They reported an RPO or backlog of 163 billion in their latest quarter and added 18 billion worth of new orders alone in that last quarter. GV is a bet on the world will need more and more power any way it can get.
All right, we'll get into my first two. The first one would be Stantec. So they are a engineering and design firm, and the company does have a small but growing data center segment. So back in 2025, they won the contract for a few of the data centers here in Alberta. They're a mid cap with a market cap of around 12 billion Canadian. They're dual listed, so they trade in the US. And the company is largely seen as a boring infrastructure play, but I do believe with that data center segment growing, if it can execute properly on the projects it has right now, there's a good chance it could lead to larger growth, being able to acquire more of these projects. The company's backlog has grown at a 10% compound annual growth rate over the last decade and has accelerated in the last 3 years, nearly 14%. But yeah, they're more that engineering design firm on data center plays for the most part in regards to Stantec. The second one is Train Technologies. So cooling is probably one of the most underrated bottlenecks in AI infrastructure. And Train is one of the companies in the United States large enough to handle hyperscaler level cooling and is already seeing a huge amount of demand for this. So the backlog has historically grown at a 6 to 7% pace annually. We're now sitting at 12.4% since 2020. They've added more than 35% to the backlog since 2023. The company's single orders for data center projects often exceed $100 million per order. These large data center projects and liquid cooling have also bumped margins meaningfully. And this is a company that needs data center buildouts to be maintained in order to justify that price point. Yeah.
I will kick us off with my first one, the company I've talked about before, which is Cloudflare. And basically what they do, the OG business, which is now giving them lots of benefits in other places, which I'll talk about, but it's basically an edge network. So around 350 cities, they're very close to about 95% of the human population is what they say. So that if you are deploying a website, you are not having, wherever you are in the world going to that website, you are going to be served it at the edge at a location close to you so that you don't have to go find a US East data center when you're in Europe. 20% of websites in the world use Cloudflare, including physical. It's still led by the founder, CEO, Matthew Prince. And so the OG business you can think of as help websites and the internet run faster. 95% of the population's within 50 milliseconds. They've now layered on different products like cybersecurity, which has been a big revenue generator. So here's the AI bull case. Workers, which is their one of their products. It's one of their big products. It's an amazing concept, really, which allows software to be executed on the edge. Not just the website, but actual inference now, which is a huge market for AI inference, is now actually going to be happening right at the edge and faster. And so that's why everyone's using it. Prince said on the latest call that AI usage on the network and specifically with workers was up 600% in the last quarter over quarter. So that's not year over year. They have a new deal with Anthropic as well too, which is basically agents need sandboxed compute close to the edge with code execution, identity, auth, security baked right in. And so Cloudflare Workers essentially allows code to be executed at the edge. In other words, closer to the user, faster speeds, better inference. Cloudflare has always been a very compelling product for people compared to just using the hyperscalers. And with agents, it's a perfect combo. So right place, right time for a historically very great product. And I think Cloudflare is going to keep growing from here on out. The second one has been a pretty obvious winner, but it is in that second order effect, which is Vertiv, ticker VRT. This is the leader in power and thermal cooling for data centers. 75% of their revenue comes from cooling inside of data centers. So again, right place, right time, and second order effects. Stock has been an absolute monster. The backlog is up 81% now, up to 15 billion. Here's the AI bull case. Every megawatt of GPU capacity needs matching power cooling. Liquid cooling is required because air cooling breaks down at this size of a rack. So you break down on cooling of each rack about 100 kilowatts. They're trying to scale these mega, like colossus data centers with 1 megawatt racks. You need liquid cooling. Sorry, not you cannot use air cooling, is what I meant to say. So it's just a phenomenal right time, right place business.
Let's move on from my next two here. So still on the energy front, NextEra Energy, ticker NEE. This is another one on the energy side. NextEra is a combination of a regulated utility along with a large-scale renewable power business. They recently announced a mega merger agreement with Dominion Energy. I don't know if you both saw that, but it's a similar business to NextEra. It's just the geography that they serve is different. So that's key. NextEra has heavy exposure in Florida, while Dominion has a big footprint in Virginia, North Carolina, and South Carolina. And Virginia is important because there's a whole lot, I think it's called like Data Center Alley, if I remember correctly. You're betting that energy demand will stay elevated because of AI and that utilities and power generating businesses will keep benefiting from that. So the next one here on the list, Corning, ticker GLW. So this is a material science company that makes highly engineered glass, ceramic, optical fiber, and related components. They have 4 main segments: optical communications, which includes fiber optic cables, connectivity products, data center interconnect products, network infrastructure. It's by far their fastest growing segment and represents about half of their revenue. Glass innovation includes display glass used in things like TVs, cell phone displays, things like that. There's also automotive. And they also have a solar division, which includes Hemlock, which they majority own, which makes polysilicon and is used in solar and semiconductor related applications. So it's a key part of the semiconductor life cycle, if you like, and is another way that they have exposure to the AI boom.
So Comfort Systems USA is the next one. So if we think of Trane as the company that kind of sells the physical hardware, chillers, cooling systems, temperature regulation, Comfort Systems is kind of the one installing the guts of the data center. So HVAC systems, electrical rooms, piping, all that type of stuff. Comfort Systems, they don't really care what equipment is in the data center. Comfort Systems have seen a much larger impact from AI data centers than something like Trane, and this does make sense. The backlog has more than doubled since 2024, and the majority of what's driving the business is new construction revenue. Since it has grown this segment at a 45% compound annual growth rate. It was nowhere close to that pre-AI, pre-pandemic. Data center buildouts have been a huge play on margins as well. The next one that I have is more of a critical mineral play, I guess you could say, with Cameco. This is another Canadian company that's dual listed. So power demand, as I had mentioned, is probably the biggest story around AI. And many say that nuclear is kind of the only sustainable, reliable, zero carbon method that gets it done. Cameco is the largest publicly traded uranium producer in the North America area. And most of its contracts are long-term with pricing escalators. And it took a 50% stake in Westinghouse with Brookfield. That gives it exposure to small modular reactors.
When I was thinking about the second order winners here, look no further than like kind of TSMC, ASML, and they're probably some of the most obvious winners in terms of the supply chain of AI. But I'm curious to you guys, if I asked 100 people, my office is here downtown Toronto. If I asked 100 people if they know what ASML is, like how many do you guys would say like what they do and what they make? Like what percent do you think? Yeah.
Would know? Like 5%, maybe less?
I would
Like
say
1 in
100.
100? That's it?
It's just not a,
I'd say 5 in
I
100 just because of, I don't know.
Yeah.
The
It's such
state of the
hot
markets right now, how
stock.
many people are kind of toying around with AI investing. Yeah.
It's just not talked about all that much.
No.
Sure. So I guess that's kind of like where my head was going, is like, where can we try to get other folks like engaged with some of the other winners here? And ASML, a lot of people who listen to the podcast, is the only company in the world that today makes extreme ultraviolet lithography. There have been many apparent challengers coming out of China. Who's to say if they're able to pull it off? What they do is actually bend physics itself to make it happen. They sell to TSMC, Samsung, Intel, SK Hynix, Micron, for example. So all of these fabs to give them extreme ultraviolet lithography, so you can potentially go to 2 nanometers with these latest prints. So they cost about 380, call it $400 million each. They have over 100,000 suppliers in each one of them. This is a massive company. The market cap's over 600 billion now today. It's just been on such a tear too.
And I guess the one thing too you didn't mention for ASML is the
100%.
just the maintenance on those machines.
Revenue is high margin, recurring in nature, required from customers. It's everything you'd want.
It's not like having a car and going to a mechanic that can probably maintenance those cars. It's highly specialized.
Yes. Yeah. You're not paying $400 million for a machine and calling your local
absolutely
electrician
not.
to fix it.
They have 100% market share at the leading edge. Blackwell, TPU, Trainium, all custom AI accelerators pass through some sort of tool via lithography, and all of their customers are increasing demand for more machines when it comes to fabs.
I guess the best way to explain it, like for someone in the street, it's essentially
Print.
the machines used to
You're
print,
printing
right?
the
Those
actual
chips. Yeah. Okay, so the next one here, Rockwell Automation, ticker ROK, is basically an industrial automation company. So think of it as Rockwell helps factories, plants, industrial facility run more automatically, efficiently, safely, and digitally. So Rockwell is basically a bet that AI adoption eventually moves beyond software, chips, data center into the physical economy. So they have 3 main segments: intelligent devices, so factory floor hardware like drives, motors, sensors, safety systems, motion controls that physically automate industrial equipment. They also have software and control, so control system and industrial software that monitor, coordinate, and optimize production lines and manufacturing processes. And then the last one here, lifecycle services. So consulting, integration, maintenance, cybersecurity, and support services that help customer design, run, and improve their automation system. Always something you'd like to see, those kind of reoccurring type services, a bit like you talked about with ASML. I'll move on to my next name here, Ecolab, ticker ECL. So Ecolab, it's definitely in that water cooling type of play for AI here. It helps businesses use less water, keep facilities clean, safe, prevent contamination, improve efficiency, and comply with operating standards. So definitely it's a play that data center, they'll need cooling system, water treatment, filtration system. Semiconductor manufacturing also needs extremely clean water, often ultra pure water, because contamination can ruin production. So the more fabs get built, the more need for ultra pure water, and that would be a big tailwind for Ecolabs over here.
This is the absolute definition of AI falling into a company's lap,
Canadian.
and that is Celestica. This is
Hey,
another.
If
It's
it
Canadian.
could just fall on our lap a little
Well, it's
more, that'd be great.
dual
Like,
listed.
I don't see it happening too often.
I mean, if you look at a chart for this company, it is absolutely wild. If I don't know the exact, but if I were to guess, it's got to be up 4,000% over the last while. Yeah, and the wildest thing is pre AI, this was a poorly ran kind of subpar business. They make GPU racks, switching gear, custom designs, things like that. I would say like manufacturing type company for things like that, like very low margin. And now like the demand has just gone through the roof. One unique area of the business now is the fact that Celestica custom designs these solutions for the hyperscalers. So it creates kind of an element of stickiness, and also it creates higher margins. So I think their operating margins have doubled over the last while, and it's primarily because of this area. So they're building out systems that they're putting in these data centers, custom solutions for, like, let's just say the Alphabets of the world. The only element here is the customer concentration. So it pretty much solely relies on the hyperscalers. I don't think it actually states what companies it's working with, but it's fairly obvious as to which companies it's working with. And I believe over 60% of the company's revenue base is allocated to like 3 or 4 companies. So if it loses one of those clients, it would have a material impact on revenue. But this is just another one that is just a pure data center play. So Hubble is another infrastructure play. So it isn't directly involved in artificial intelligence, but it makes a lot of money off the back of the hyperscalers building it out. So we're talking transformers, switchgear, etc. And it's an interesting one because it would have been a unique play on the build out and expansion of the electrical grid anyway. So now you have that double tailwind of grid expansion plus AI data center build outs. They have 2 segments. So they have utility solutions, which is the majority of the business. It's around 60%. And this is the segment that is selling all of the equipment to the utility providers that are then charging rates to the hyperscalers to provide power. It's growing at around 18% a year. And then they have the electrical solutions, which is around 40%, where they sell all the switch gear, et cetera, to actual customers. That segment is growing 12% a year. And again, I mean, there's numerous bottlenecks in the AI space, but I do think the one that is going to stretch out the longest term is the power supply infrastructure space.
My last two. Okay, 2 businesses that are very different. I've talked about QXO before. It's Brad Jacobs building products roll up. I did a full episode on it. I own the stock, bought it in the last 2 capital deployments. He's done this 7 times with roll ups. He's done it at $1 billion scale 7 times. This is the biggest yoga stretch for me when it comes to AI winners. But I'm a shareholder for the long haul, and we're throwing it in here because they just bought Top Build. Well, they're going to be buying Top Build. It is the now, after this, largest company in North America for insulation, the 2nd largest company for roofing, the number 1 in waterproofing, and number 1 in lumber. Brad is the ultimate promoter, ultimate user of our stock to do these acquisitions. So of course he's going to say it's a data center winner. But I did do a little bit more research, and Top Build actually bought 2 years ago a company called Progressive Roofing. And that is the leading vendor for hyperscalers when it comes to roofing. So there is a little bit of truth to Brad's storytelling when it comes to the stock, but this is now one of North America's largest building products companies. And if we're talking about infrastructure, we can throw it in there. All right. Yeah. My last one here, Synopsys, ticker SN. It is EDA software and semiconductor design software. So basically what that means is what EDAs are is basically if you are a chip designer like Nvidia, like you have your own custom silicon like a Trainium or Apple's M series, you need software to design the chips. And so they are in a duopoly with Cadence. So think of them as like Autodesk if Autodesk is for architecture, Cadence and Synopsys are that, but for the semiconductor industry. Every AI chip company, whether you're Nvidia, your hyperscaler with your custom silicon, AI chip startups, Nvidia, whoever, you use one or both of these platforms. And there's a distant third player in the market, which is Siemens EDA's platform, but it's a essential part of the stack when it comes to semiconductors in this duopoly. And they have over 100% retention rates and have forever. So it's a good business to own.
Okay, so the last two here for me, Generac, so ticker GNRC. Generac sells power generation and backup power. They have both residential solutions and commercial solution, and of course industrial within that commercial segment. The play here is definitely for AI that data center will need backup power to ensure that they stay online in case of power outages. It's one of the smaller companies, probably the smallest. Revenues have been lumpy over the last 5 years, but after a decline in 2023, it's been slowly increasing over the last couple of years. So definitely kind of the backup power generation angle here. And then my last name here is Eaton, ticker ETN. So Eaton sells electrical and power management products. They sell both to private and government entities. They have several segments, but the most relevant one is the electrical segment, which represents about 2/3 of the revenue. You can think of just grid equipment, for example, grid modernization, substation, distributed energy, transmission, distribution. They also cater to data center power distribution, backup power, UPS systems, switchgear, transformers, and electrical infrastructure. So probably a very clean AI data center play in terms of Eaton. They have a market cap of 155 billion, so not a small company, and revenues have increased more than 10% for each of the last 4 quarters. So definitely seeing some nice growth there as well.
All right, and the last one I'm going to go over is Constellation Energy. So they are one of the largest electricity producers in America. So they have around 55 gigawatts of capacity. Back in 2024, they locked in a 20-year power purchase agreement with Microsoft, which restarted some of its nuclear reactors. And then in 2025, they locked in another deal with Meta. I don't know how long it was, but it was long. I don't know if it was 20 years like the Microsoft one, but much like the Kamiko edition, the thesis here is there's no AI build out without power. And a lot of these hyperscalers are going to be looking for carbon-free sources, reliable sources. You could argue you can't get that anywhere else except nuclear, and Constellation is kind of one of those companies that can bring that to scale. And pretty simple here: higher demand for cleaner power, higher demand for Constellation's
That was
services.
3 Mile Island that they booted back up, right?
Yes.
Yeah, I remember.
Yeah.
I believe
that
so,
was a
yeah.
big deal at the
Yeah.
time. Yeah, Microsoft.
Got to get power anywhere you can get it.
And I think like this one, I think it's a bit volatile because I think their deal with Microsoft got pushed into the future, which kind of caused some rockiness in terms of share price. It's not like the 20-year deal is still a 20-year deal. It just got kind of pushed out. So they tend to trade quite wildly for a utility company. I'm not exactly sure why. I would imagine that has something to do with it, but yeah, it's a big energy play.
Well, that does it, folks. Is that every all of them? Got it all?
Yeah. That's all
So,
of the names.
This is live on the custom indexing under hidden AI winners. You can see on the platform what the kind of 1 year, 5 year return of some of these names is. It's quite insane, to be honest, some of the performance of these companies. And it's available now on the custom indexing platform. So it's pretty cool. This is one feature that a broker has actually brought in Canada where I'm like, I am actually going to use that. Putting fancy technical analysis charts and real-time trading data, I don't think gets us going, but this is something I think that there's actually a lot of value in.